In this presentation, we will continue on with our practice problem related to the enterprise fund, this being part 2. We got the information on the left side. We've entered that information into the blue area on the right side, thus far entering information into the general journal, journalizing the journal entries, and then posting them to our worksheet. We've also done the closing process, as can be seen down below. What we're going to do now is scroll back up to the closed adjustments, or the trial balance, or the ending trial balance. We're going to take those numbers to make the financial statements, those financial statements that we will be making being the statement of revenues, expenses, and changes in fund net position, like the income statement account, and then the statement of net position, like the balance sheet account, if we were talking about a for-profit type of organization. So to do that, we're going to scroll back over. We're going to hide some cells to do this most efficiently, most easily. To do that, we're going to put our cursor on column J and left click, and then scroll over to column K, let go of the left click, and then right click those items that we had left clicked on, and then hide them. So we're going to hide those so that we just have column L. We don't get mixed up with our numbers as we enter that information into the data. We see that, of course, we have the assets in green, the liabilities in orange. We have what would be the equity section, assets minus liabilities section, the net position in this case section in light blue, and then the dark blue has the what would be the income statement account, the temporary accounts, those accounts that would close out into what would be the equity section in a for-profit type of organization, temporary accounts here that would close out to net position section here. And then we have our financial statements we're going to be creating. Many times it's recommended to create the income statement type account first, which would be the statement of revenue, expenses, and changes in fund net position here. And note that if I don't use that long term of a title and call it an income statement from time to time, remember I mean income statement like, because it's easier to say income statement. But I would tend to do the balance sheet first if you have a well-formatted trial balance, because it allows us to build it from top to bottom, easier process to deal with. So what I'm going to do is actually hide the this financial statement. We'll work with what would be similar to the balance sheet first. So I'm going to put my cursor on column N. So we're going to highlight from N to Q. So select from N to Q, let go, right-click on the selected area, and hide them. So there we have that, and now we have the enterprise fund, and we have, of course, that we're on the enterprise fund, and we have the statement of net position. That's going to be similar to the balance sheet. So we are using accrual accounting, and therefore we don't have, like other types of funds, the modified accrual basis. So this is going to be more familiar to what we would expect, what we are familiar with. We're not going to have, for example, just current assets. We're going to have current assets and long-term assets if they are applicable, if they are in the enterprise fund, and therefore we're going to break out the subcategory of current assets as you would have in a for-profit organization, things you don't see typically in the modified accrual basis, which other types of funds are in, and the modified accrual for the governmental type funds, which is the largest category of funds. So this is a proprietary fund, therefore we're using the accrual basis, therefore we have current assets and long-term assets broken out. And then we're going to go through and we're just going to pick up the assets that are in the current assets, and that's going to be the cash, of course. Then we've got the accounts receivable. We've got the accumulated net. Now, we might put the accounts receivable on their net, so we could combine these two and put them on their net. So to do that, we're just going to say, let's call it accounts receivable net, and we'll combine them. So if I pick up our numbers as we go, we're going to say that we have this number, and we're going to have to make that a little bit larger so we can see it. And then we're going to say the combination of these. So the 353,159 minus the 18,588 is the 334,570. I'm going to do that with a sum function. So equals the sum of those two numbers. And there's the 334,570. We might want to actually highlight these as we go by making this list. I'm going to make these little squares yellow as an indication that we've been completing those, or those have been completed. And then we have the accrued utilities and the due from general fund. We're going to put that into the current assets. And then we have the interest receivable. We'll put that into the current assets as well. So let's pick these up. We're going to say that we have the accrued utilities. We've got the due from general fund, and then we've got the interest receivable. And then of course we've got the restricted assets on the cash. Now we're going to put this into its own subcategory, which is going to be the restricted assets. So therefore, we're going to total up the total current assets, and we're going to pull that out to the outer column by saying equals the sum of these items. And we'll pick that up into the outer column. I'm going to go ahead and underline this one. And then we're going to have the restricted assets. So we're going to say these are the restricted assets, and that is going to be equal to, or we're just going to be picking up the restricted asset of cash, and we're going to put that right in the outer column because of course we don't have any subcategories. So I'm just going to pick that up in the outer column, and there we have that. Now we could check our numbers by selecting these items, debits minus the credit. Notice that subtraction there because the credits are in negative numbers. And if we highlight these, that comes out to 3,001,028, which matches here, and then of course this amount matches here. So we found a home for all of these yellow ones we've marked off with yellow. Now we're going to go to the next category, which is going to be a category of capital assets. So we're going to have the capital assets, which are like property, plant, and equipment assets, the depreciable typically assets. We got land, building, the accumulated depreciation related to it, the machinery, accumulated depreciation related to it. So if we pick that up, we're going to say that we'll have the land is going to be this item. And then we might, again, net these out. So let's put the building on their net so that we'll save some space, and we'll say this is the building net, which means we're going to say this is the sum of the building account and the accumulated depreciation related to it. So we'll subtract those two out then, and we get this item, this number. And then we're going to say the machinery and equipment. Well, let's do that net as well, of course. We'll do the same thing, machinery and equipment net, meaning net of the accumulated depreciation equals the sum of the machinery and equipment net. And so there we have that. And then the land, of course, we don't need to net it out. It is what it is because it has no related accumulated depreciation for it. So if we sum those up, we're going to get the 15,482,950. That's going to be our total capital assets. So that's going to be total capital assets. We'll bring those out to the outer column, column T, by saying equals SUM, and sum those three up. So there we have that. I'll make this a little bit larger so then, of course, we can see it there. So 15,482,950. If we were to highlight these items, we get that same number. I'm going to make these yellow. And then we want the total assets. So we'll say total assets, and we'll sum up the outer column, the sum of the outer column, and that's the 18,494,652. And again, we could double check that by highlighting all the green ones, 18,494,652. So there is that. Now we're going to go to the liabilities. So liabilities are going to have current liabilities. So we'll start off with the current liabilities. And we've got the accounts payable, the interest payable, the current portion of the long-term debt. Those are all going to be the current liabilities. So we're going to say, all right, this equals the accounts payable. We have the interest payable. We have the current portion of the long-term debt. Now we're going to pull those into the inner column. I'm going to take these numbers. I'm going to flip the sign by being in cell S21 and saying negative of that number, negative of that number, negative of that number, and that'll give us the total current liabilities. We'll bring that to the outer column with a sum equals the sum of these three numbers. There's the total. Let's underline this one. We're going to go to the home tab, underline. So there is that, and we have the total here. Then we've got the liabilities and payable from restricted assets. So we're going to say these are restricted. And this is going to be equal to the liabilities and payable from restricted. And let's just call it actually current or customer deposit. And then we'll put that in the outer column, negative of that 10,674. So there is that. And then we've got the long-term liabilities. So the long-term liabilities, which of course is going to be the bond. So we'll pick up the bond, which will be this amount. Again, only one of them. So we'll put that in the outer column. Negative of that total, and that gives us our total liabilities. And I'll sum these up in the outer column. So that's the sum long term, the liabilities from restricted assets, and the total current liabilities, giving us our total liabilities here. Then we have the net position, which is similar to the equity section. The net position, this is the one that usually people can get most confused on, of course, because the net position of these light blue accounts, but that's the beginning net position typically, because nothing has been posted to them, just as there's nothing typically posted to retained earnings or to a capital account in a corporation or sole proprietorship, respectively. But we are then going to close all this information out to it, as we did down here in the closing process in the prior presentation. And so this is really the ending balance in our net position accounts. So if we think about that, then we could say, okay, we know the total net position. And now I would rather think of the net position in the balance sheet, so we can kind of check it here and then record the income statement portion of it, which is going to be the temporary activity in the dark blue accounts. So one way we could think about this is we could say, okay, and this is true with basically any entity. We could say, let's think about the total net position as a whole before we start grouping them out into different groups, such as net position and the capital assets and net position unrestricted. Let's think about net positions as a whole, all the blue accounts, which would be the negative sum of all the blue, the light blue and the dark blue. We pick all those up and we say there's basically the total credits minus the debits. And then we could think about, okay, well, what's going to be the breakout between, in this case, the net investment capital assets versus the net position unrestricted. So, and this would be similar if we're in a partnership. What's the breakout between the partners? If we're in a corporation, what's the breakout between retained earnings and common stock and whatnot, additional paid in capital, and so on and so forth. But so the total, we can always think about that. And then we made a calculation down here in a prior presentation. You'll recall. We actually did it. Where did we do that? Oh, we did do it down here, but then we hid the cells. So let's unhide the cells so we can see this calculation. So I'm going to put my cursor on I to L, right click and unhide. So here's our calculations. We don't need these. And so this is going to be the net position in capital assets, the ending balance. So that's going to be our breakout of between the two net position at the end of the time period. So we're going to say, all right, this between these capital accounts, we have two capital accounts involved. So I'm going to say this equals the net position or net investment in capital assets, and this equals the net position unrestricted. The amount that we're going to put into the net investment in capital assets is going to be according to our calculation down below, which is going to be this amount. And then the difference between the two, which is going to be the total minus this, is what we're going to put in the net position unrestricted. So if we add these two up, it's going to be the 5,729,146. So the way you could think about this, here's the total. That is what it is. It's going to be all the dark blue. How do we break those out? All the blue, not light and dark. How do we break those out? Well, we figured out what the net investment in capital assets would be, and therefore the net position unrestricted is going to be this amount, the total minus what's going to be in the net position capital assets, that giving us the net position unrestricted. Okay, so we've done that. Now let's go and unhide some cells, and let's do what would be the equivalent of the income statement. Recall that I probably have called this the balance sheet multiple times. It's actually called the statement of net position, but it's pretty much similar to the balance sheet, and very similar because we're on an accrual basis here. So now we're going to unhide the cells and then work on what would be similar to the income statement. So I'm going to click on L and drag over to R, L to R, and then let go, right click on the selected area and unhide those cells. And now we have the statement of revenues, expenses, and changes in fund balance or fund net position. And so that's going to be pretty much the equivalent of the income statement. And we're going to go through these items in a similar fashion, of course, concentrating down here in the dark blue accounts, those being the temporary accounts, the income type related, similar to income statement type of accounts. Okay, so to do that, let's hide column J and K again so we don't get mixed up with the columns. We can have as few columns as possible because I get confused really easily. So we're gonna highlight J and K, right click on it and hide them, and then we'll go straight through. We're going to go straight through these dark blue accounts, starting with sales, of course. So we're going to start off, our first item would be operating income. We'll have a subtotal Here, we may not need it in this case because, of course, all we have is sales. But notice we have sales just like we would in a for-profit organization. We didn't call it revenue. We're going to call it sales, which is the term we would be used to if we sell like inventory in a for-profit type of organization. I'm going to flip the sign, of course, from a negative to the positive. I'm going to put this in the outer column because we only have one thing there. And so we don't need a subcategory, in other words. And then we're going to have the operating expenses. So we're going to say operating expenses and then a colon to represent the fact that we have a subcategory related to them. And scroll back down, and we're going to pick up within the operating expenses the management and admin. Now note what we skipped here. We skipped the capital grant contributions and the interest income, because that's not going to be the normal type of income that we have. We will include those, but we're going to put them down below. That's not going to be income from our normal operations. So we're going to say enter, and then we have our item here. And notice that's going to be similar to a for-profit type of organization. This is an enterprise fund, a proprietary fund. We want to say, hey, is this fund paying for itself? In other words, so we want to basically treat it as, here's the operating income, here's the expenses related to it. Do they have a net profit in essence from operations? And then think about the other type of income that would be involved, and that of course would be things like grants, which aren't part of the proprietary activities of the fund, which would be what we're looking for. So next item, we're going to say in the operating expenses is going to be the maintenance and distribution, and we're going to say that will be equal to this number. And then we have the treatment, so we're just going to scroll down and keep on picking these up in the similar fashion. The treatment is going to be equal to this one. And then we have the uncollectible accounts receivable. Let's say equals. We're going to pick up the uncollectible accounts receivable. And this might be a little out of order, but that's okay. We'll pick them all up here. Uncollectible accounts receivable. And then we had the depreciation, which is going to be equal to the depreciation expense equals the depreciation, and that's the 613. So there we have that. I never put a number up here, so here's the management and admin. Management and admin is there. So there we have that. So we're gonna, if I go down here and highlight these, I'm gonna say we found a home for the revenue, and we found a home for this one, this one, this one. So let's make those yellow. We found a home for depreciation and uncollectible accounts, which is similar to basically bad debt expense. So there are those. Now, we haven't found a home for these two. We've discussed why, because they're not included in, normal income. Interest expense, typically just like a for-profit, often not either, because that's not what the enterprise fund is in the business of doing, investing, generating interest. That's going to be something not in normal operating expenses. And then we have the Interfund Transfer out, and that's going to be kind of acting like an expense here, so we're going to have to decrease it at some point. But of course, that's a transfer out. That's not normal part of operating expenses, therefore not going to be in the operating expenses. So I think we have everything in the operating expenses. So let's go ahead and sum these up. Let's total them out into the outer column, which is in P12, and we will say equals the sum of this column, and that'll give us our 2,286,417. Next, we're going to have operating income. So the operating income, we're just going to subtract these two out. So the operating income is going to be the sales minus the operating expenses, that giving us the operating income. Next, we're going to have the non-operating revenue and expenses. So we're going to list out those revenue and expense items that we don't consider to be normal parts of operations. That's going to include the interest income. So you'll recall we had the interest income here. That's going to be typical for a for-profit organization as well. We're putting these down below because they are income and expenses are increases and decreases, but not part of normal type of operations. We're going to pick up the amounts then for the income. We're going to pick up the interest income, and we will then, and so we're going to put that in as a positive number, and we're going to put the interest expense in as a negative number. So I'm going to negative of the interest expense because we're going to put these on the same column. So we're going to take the positive number, minus the negative number, and that's going to give us the total non-operating revenue and expenses. So I'm going to sum them up in the outer column by saying equals the sum of these two. So obviously the expenses are more than the revenue. We could then put another subcategory then, which would be income before transfers and contributions, and that would of course be the sum of these two. This is where we left off. Here's the new thing that happened. If we then say this equals the sum of those, we get the 832, 252. We've now found a home. Going through this, we've got the interest income that we found a home for, and we've got the interest expense that we found a home for. So we don't still have the contributions, of course, and the interfund transfer out. That then being our next items. So the next items we're going to have is the interfund transfer out. So I'm going to pull that, well, we could put this into the outer column. We've got the interfund transfer out, and we're going to say this is equal to the 817,580. Now, we want that to be negative now because it's the transfer out. So I'm going to flip the sign there. I'm going to double click on it, put a negative in front of the L and flip the sign. So that'll be a negative to pick that up. And then we've got the capital contributions, which is going to be equal to, I'm going to say negative of this number, the contributions, because that's a grant. And that's a positives because that's kind of like income, or that would be increasing, in essence, our net income, but it's not part of normal operations, not part of the normal business type of activities. And that's going to give us our change in net position. So the change in net position, then it's going to be, this is where we left off last time. These two are the activity. So if we sum them up, we're going to say equals the sum of those three. That gives us the 501.92. Then we're going to basically tie this out to the net position number. So we're going to tie this out to net position by saying this is the beginning balance in net position, which is going to be the negative sum of these two items. And remember, this is the beginning balance because nothing has been posted to these items throughout the time period, just like nothing is normally posted to retained earnings or to the capital account. And then we close out at the end of the time period. So because there's nothing being posted to it, we can basically easily do this transaction or this last piece at the end, because we're just going to say, here's the adjustments, here's everything that happened, here's basically the sum of what will be similar to the income statement account, the temporary accounts at the 501,092, and that's basically this number, the change in net position, kind of like the bottom line type of number, income statement. And then we're going to say that the sum of all the blue accounts is going to be the 5,729,146, which now it's going to be the sum of these two. So the sum of these two then gives us our ending balance in the net position. So there's our ending net position there. Now that number then is going to be on the balance sheet. So if we go to the balance sheet, we see the balance sheet is the 5,729,146 as is shown there. So we can see how these two tie out. And of course the balance sheet also in balance by saying that the liabilities and the net position add up to the 18,494,652, which of course is the assets as well, or we can consider the assets minus the liabilities, that being the 1,849,4,652 minus the 1,276,5,506, or the 5,729,146.